We spoke to the management of Afcons IPO, and let's shift our focus to the action on the primary markets. Afcons Infra is one of the new IPOs that we are focusing on. The issue will open on 25th of October and close on 29th of October. It's a 5,430 crore issue with a fresh issue of 1250 crore and rest being offer for sale. Talking about the company financials, it posted a profit after tax of around 91.5 crore with revenue over 3,100 crore. My colleague Sajid Mangat caught up with the management and started by asking the purpose of the fresh issue. Listen in.
Welcome to NDTV Profit. You're watching IPO Adda, and my company in focus today is Afcons Infrastructure. It's one of the leading EPC player in the country. The company's IPO is opening on October 25th, closes on October 29th. Price between 440 to 463 rupees per share. The company is raising 5,430 crores, which includes a fresh issue of 1,250 crores and OFS of 4,180 crores. It has also raised in a pre-IPO placement of nearly 2,967 crores. So the total process of raising is almost $1 billion or 8,400 crores, which if you include pre-IPO and the current IPO together. And joining me together is Subramanian Krishnamurthy, who is the Vice Chairman of the company, and Mr. Paramasivan Srinivasan, who is the Managing Director of the company. Gentlemen, thank you very much for joining us on NDTV Profit. Let me begin with the first basic question. You're raising 1,250 crores in fresh issue. Can you state the purpose for that?
The purpose of our issue is to repay our working capitals, the high-cost loans of 600 crores and about 80 crores of capex and 250 crores of general corporate purpose and 320 crores of other working capital related requirements.
Mr. Krishnamurthy, if you can give us an understanding of the company in terms of the business verticals you have, the kind of projects that you undertake.
Afcons undertakes complex civil engineering projects which are one of a kind, and it's spread across all the verticals of infrastructure construction other than factories and buildings. It is in ports and harbors, it is in bridges, it is in roads, it is in hydro, it is in oil and gas, and it is in metro construction. We are a pure play EPC company, and we don't do asset ownership. And we work both in India and outside. And
if I can ask you, if you can take us through some of the verticals that you are in, give us an idea of the verticals also you are in, because you are there in multiple verticals across your UPC play. So can you give us an idea of what kind of verticals are you in as well?
Surely, Mr. Paramasivan, would you like to answer?
In marine, we are the 10th largest marine player in the world as per Engineering News Record Statistics USA. Similarly, in terms of bridge, we are the 12th largest player. In aqueducts, we are the 18th largest player. In overall transportation, is 42nd largest player in the world. That's for the overseas business. And we are a Government of India recognized 5-star export house for our consistent export performance. And in our overall scheme of things, urban infrastructure is our major vertical today. It keeps switching depending on the order flow, and then followed by hydro and underground, then marine, surface transport, and oil and gas. And in each of the areas, we have done good marquee projects of significance.
Give me a sense of your order book as well, if you can give us a breakup as well.
We have, as of 31st March, around 31,000 crores of order book, and further orders we have booked during the year. And it's spread across segments, roughly around 50% in urban infrastructure and about 22% in hydro and underground and about 18% in marine and surface transport and oil and gas, the rest.
Mr. Krishnamurthy, one of the key things that an EPC player requires is a working capital there. You are raising the current funds, which will, of which 320 crores will be used for working capital. I was going through your RHP, your working capital requirement is in excess of 3,000 odd crore, the net working capital requirement. How do you manage the working capital, and what kind of cash flows that you foresee to help you out?
As far as our working capital cycles are concerned, they vary from quarter to quarter. Quarter 4 is more representative compared to the earlier quarters. And the fundraise would also help in the working capital requirements. And in the first 6 months, we have booked 19,000 crores worth of orders, including L1. There will be substantial advances that is flowing from that. So I expect the situation to be comfortable.
Mr. Srinivasan, working capital requirement, what is the kind of cost that you have to incur? Because if I'm not wrong, it says around 91 days is a working capital requirement for you, which is almost a quarter. What are you doing to reduce the working capital requirement?
No, in our, if you really look at it, 91 days is for the quarter of June. Otherwise, if you look at the March, which is typically a representative figure, we are at 63 days. Typically, pre-COVID, we were between 60 to 70 days. And post-COVID, thanks to government's various concessions and other things, we have reached even up to 38 days at some point of time. Sometime in March 24, it has reached 63 days. And we would feel that we will be in the range around that. This 91 days, 92 days, all that is even for the quarter of June, where, it's an election quarter and things have got delayed.
But you expect this to get normalized by the end of the financial year?
Yes.
Okay. Give me a sense of the kind of, you mentioned the order book kind of thing. Can you also give us the kind of projects that you're working on? And normally, what is the kind of, mix that you maintain for domestic as well as international orders? Mr. Krishnamurthy? Yeah.
The kind of projects we work on varies across multiple verticals. Yeah. We are on the railway jobs, we are on the port jobs, we are on the hydro projects, we are on the metro projects. We are now doing the longest undersea tunnel in India, in Mumbai. We are doing the connectivity of various islands in Maldives. We are doing metro projects in Delhi. We are doing port projects. And abroad, we are doing 30% of our revenue from in Africa, in neighboring countries, in the Middle East, across the sectors I mentioned.
Typically, our domestic and international varies between 70 and 30. Right now, because of more domestic order booking, it will be somewhere between 75-25 ratio. And that is what we are currently placed in.
Since you are one of the largest EPC players in the country, give us a sense of the kind of the tender book which is there for both for the central government orders and the state government orders. We've seen a lot of, what you call ups and downs and volatility in this because of the state elections and central elections which have come in. How do you see the tender flow for FY25?
No, we believe that in terms of the projects in the pipeline, it is quite large. And you would have seen for the last 3 years, our hit ratio is in the region of about 22%. Therefore, we don't foresee any problem in terms of order book. The segmental shift could be there here and there. Some priorities could undergo change. Instead of road, it could be rail. And there will be a huge priority for hydro. All those things, but overall, we believe we are well placed to capture the right opportunity.
Because of the wide diversification of our company across multiple verticals and because of overseas presence also in multiple countries, and the kind of market growth potential that are being projected, this issue would be well taken care of.
How are you looking at the government capex program? Because they have announced a capex program, but because of the first 6 months being slow on account of elections, we have seen across players not just the industry as well, that the order flows have been little slow to start with. Do you see this picking up in the second half?
It should pick up in the second half, and even in the first half from March to September, I mentioned to you that we have booked 19,500 crores worth of orders, including L1s at 8,000 crores. So we are comfortable for the position.
Are you seeing more of a state government capex?
And it is also likely to pick up in the second quarter.
Okay. Now, my point is that are you seeing more of a state capex coming in, or you're seeing more of a multilateral, orders which are coming in, multilateral agencies which are putting out the orders which are coming in?
It will be a blend. See, typically, the central government is a major spender of infrastructure projects. And state governments now increasingly have become aspirational in terms of specific states wanting to prove to the electorate that they are focused on the infrastructure. And therefore, there has been increased spend by the states as well. And whenever these spends do happen, many of them, they try to tie up with the multilateral financing institutions like JICA, Asian Development Bank, or similar, or European funding, similar. And therefore, even the government spends are converted into kind of a multilateral funded projects. And in the process, it's taken through smoothly.
Mr. Srinivasan, I want your comments on your growth as well. Between FY21 to 23, your CAGR growth for revenues were around 16%. And between 22 to 24, it came down to 6.4%. What is a normalized growth rate that you see at this point in time?
Whatever you have seen between 21 to 23 is something which we would think could be this thing, where you know pretty well we can't give any guidance on this. But whatever we have achieved in the past is a good norm. And you know our order book position today. Considering that, we would expect to continue the momentum.
And how do you look at the margins picture? Because you have been able to scale up the margins to over 11.2%, the core margins in Q1. In FY24, it was around 10.3%. So above 11% margins are a normalized margins in the business for you?
If you look at it, our FY24, we were at 11.6%. And Q1 25 is also at about 11.6%. I would put it that on a consistent basis, we have been achieving decent margin. And there is no doubt in our mind, we will be able to sustain the levels as we have achieved in the past.
While these are blended margins, can you give us a sense of the margins that are there in various segments? Because my understanding is that the marine segment has a much higher margin profile compared to other urban and other segments. So while you have currently order book which is...
Segmental margins is something...
Yes, please go on.
Segmental margins is something which we have not presented in the DRHP or anything. Therefore, we will not be in a position to give segmental margin. But suffice here to say that on a blended level, we will sustain our margins.
Okay. Also, if you can give me a sense of your trade receivables, it was roughly around 3,900 odd crores. How do you see that panning out going forward?
No, our overall, if you look at our net working capital days, and it is at the level of between 60 to 70, and we believe that could be sustained. And there could be aberrations during the quarter, but overall for the year, it could be somewhere at 60 to 70 days. That is what we would look forward to, which was the situation earlier also.
And what about the receivables which are stuck under litigations? It's roughly around 1,100 odd crores. Do you see some near-term resolution to those litigations?
Yes, it will happen because it's all under different arbitration monies received. Arbitration awards received, And in few cases, we have taken 75% as per Niti Aayog guidelines. Few cases, once it goes to the court of law, we can't stipulate any specific timelines. It could vary between 3 years to outer limit, we can't say anything. Therefore, it will take its time, but we are by and large protected, where few of the cases we have already received 75% against Niti Aayog guidelines. Balance, we are this thing.
Mr. Krishnamurthy, give us a sense of your...
Therefore, on arbitration receivables, we can't say a specific timeline.
Okay. Mr. Krishnamurthy, my question is with respect to your international order book. Do you go for international orders which are backed by Government of India? Or is it that you look at international orders as a standalone as well?
Three types of international orders we focus. One is supported by Government of India and funded by Government of India. Other is funded by multilateral institutions. Third, with certain established marquee private sectors like ArcelorMittal, Olam, we work. So these are the three focus areas.
Okay, and of the top 5 customers...
And there are some cases where we arrange funding through...
Yeah, continue, sir.
Government is an important customer, central government is a very important customer for us, and followed by state government agencies, and it varies. Railways would be an important customer, ports would be another important customer for us, metro organizations would be a third important customer. Like that, it varies.
Today, if you look at top 5 orders, if you are asking, number 1 is in terms of high-speed railway bullet train underground project. Number 2 in terms of Maldives project, where connecting islands. And number 3 could be the couple of DMRC projects underground metro. And number 4 could be GCPTL, where this thing joint venture between Gujarat government and Reliance Mukesh Ambani Group. These are in terms of order of sizes or other thing if you look at it.